So yo guys, welcome back to our channel. So in this video we'll be going through a stock that we're both invested in that over the past week or so it's just been kind of going down. So on our investment we're down nearly 20% from what we invested. So yeah, I think this is one of our biggest loss since we started investing. So I feel like this is one of our first big loss in the stock market, and we just want to make a vid to tell you how we're going to deal with it, and just in hopes to help you navigate the stock market and show you potentially what you could do when a stock you're investing in is performing badly. But yeah, let's just get into the video. So first of all, the company we're talking about is called Hyliion, ticket symbol HYLN, previously known as Tortoise. So I think you saw it on when we went through our portfolio. We were still investing in back then. So yeah, so there was a merger that went through. Then obviously when a merger happens, you get the name change. So it went from Tortoise acquisition to Hyliion, and since the merger the stock's just been kind of performing badly, and you'd expect the opposite for it to be doing well, but in this case that was not it. So I think my cost base is somewhere around $36, and right now it's trading at
29.77.
Yeah, 29.77. So yeah, so we're down quite a few dollars. But yeah, so we're just going to talk about what we're going to do with the stock. So in terms of the actual company itself, I still feel like it's a great company. The actual Hyliion company, it's an EV company, and it's a great company and great products, and in terms of performance and spreadsheet, everything looks good. So the question is, why is it going down? But why do you think it's going down?
Before the merger, there was a lot of hype around Hyliion, and I was like, buy into this company, let's buy it, it's gonna go up, it's only going up, and that's what happened. They did keep going up. It hit 40, it hit 45, it hit 50, and it hit 55, and people are like, okay, this can go to 75, this might go to 100. So people start buying more and more, but then there wasn't really much news around Hyliion. There was no new products, nothing.
Yeah,
they don't have the social presence like other companies. Like, they don't have any big names. Like, the CEO is not, no Elon Musk. You won't hear him on the news or nothing. So yeah,
people start to sell off.
Yeah, and people just realize like, oh, I've actually made a bit of Hyliion. Like, let me just take what I have now. And then the EV market was going down as well, so you've got to remember that. So as people start to sell off, it just created like a domino effect. So as the stock market price went down, a lot of people just kept selling on and on and on and on, and that's what's been happening. So like a domino effect, and now it's sitting at $30. So
below 30.
Yeah, below 30 now. Yeah. So a lot of people have taken a big loss on it, and a lot of people have tried to short the stock, so they try to like do it for a quick trade as well. So this is what's affected the stock price as well, I think, in the short term. So
yeah, I think that's why our cost base is a bit high as well, because when we found out about the stock, the company, and then when we bought into it, we kind of bought into the hype. So if you look on our Insta page, we made a post because we bought into this company like months ago. So this is when we were still kind of new into the stock market. So there's something known as the fear of missing out, and I think that's partially why we kind of bought into this company, because there's so much hype behind it. But we're here to tell you, don't buy into a company because of hype, because also we did our own research into the company and we like the company, but a big influence was the fact that a lot of people were buying into it, hence why we bought into it at such a high cost base. Because I bought into like 32, then when it got to 50 I bought more with the expectation that it will get to 70, and obviously that was not the case, because it reached 55, then quickly went down back to 40, back to 30, and now 29. So that's a big lesson that we kind of learned. Don't follow what everyone else is doing, and this fear of missing out will only lose you money. But besides that, with this company, I'm glad that I was with this company, because I still see a very good long-term growth in the company. So right now what we're gonna do is just average down on our costs. So as we have more income coming weekly or monthly, will put a proportion of that income into Hyliion to average down on our cost base. So that will ultimately decrease the amount we lose. And I feel like this company will definitely bounce back, because it wasn't just Hyliion that took a hit. A lot of EV companies such as Tesla, such as WORKHORSE, took a hit. And as you can see, WORKHORSE is going back up the last trading day on Friday. And also you've got Tesla, which is also going back up. And I feel like Hyliion will take a similar trend to these EV companies, so we could see Hyliion going back up soon. But even when I get to a place where I haven't lost money, I'm still going to keep holding it, because I see the long-term growth in this company, and I feel like it's a good investment long-term. And as you should know by now, we're long-term investors. But
so you also remember Trump tested positive for coronavirus, and this was like the exact same time the tick symbol changed. So people are like, oh, the tick symbol might bump up the price a bit, but no, Trump decides to catch coronavirus.
There was so much catalyst that kind of that pulled the stock price down. So as the merger was going on, you had the whole COVID, you had the stimulus check as well in America. So a lot of factors was kind of not letting the stock move up. Hence we just saw a decrease. People don't want to buy into it, and people are selling off. So
and a lot of people have sold off and just taken the losses, but this is not something that we're going to do. As Carlos said, we're long-term investors. So I see it has great fundamentals. It's a great company, and I feel like in the future, when the EV market does take over, we can see this company flourish.
So this is just a quick video. I don't think it's that quick, but this is just to let you know to don't be scared when a stock is performing badly. You need to just don't let the stock market scare you. If a stock is performing badly, just take it as a positive, and you can buy more at a cheaper cost base. Because if you've done your research, like we said, that means you believe in the company long term. And if you buy the company at a cheaper cost, when it goes up, you just make more money. So just don't see it as a negative. And also, the biggest part is the fear of missing out. Don't fall victim of the fear of missing out, because people bought Tesla at $500 at its peak, and it's not touched nowhere near $500 again since the stock split. So just don't fall victim to the fear of missing out, and make sure to do your own research and don't follow hype. Because if you're not getting into investing, you need to be willing to put in the work. Instead of letting someone else put in the work for you, then you take the loss if the company doesn't do great. Because end of the day, the great thing about the stock market, it's all dependent on your own hard work. So if you put in the work, you make money. But if someone puts in the work and you just kind of copy and you take a loss, then you've got no one to blame but yourself. But that's just that's the end of the video. So that's the end of the video. I think it's kind of longer than we expected, but I hope you enjoyed the video.
Hope you found it useful. So just like
the video,
subscribe,
and subscribe, and we'll catch you in the next video.